All right, what's up, guys? Can everybody hear me? Testing, testing. 1, 2, 3. Can you guys hear me? What's up, guys? Yes, there will be snacks. There's going to be lots of Big Macs eventually. Just stay. You guys going to get your Big Macs soon enough. Good morning, guys. Thanks a lot for coming here. Thanks a lot for submitting all your wonderful and beautiful questions. Got so many of them. Really great, awesome questions, guys. It really goes to show you guys that you guys are doing really well out there. You guys are asking some really nice questions. And I had a really good time reading all of them and answering them. And we're going to go ahead and go live and explain to you guys everything that I know, so I can give you guys the lowdown, the 411, so to speak, about trading. So let's go ahead and jump right in and dive right into the first question. All right, the first question comes to us from Trung, who asks, how would one learn to tape read if they don't have Dash Trader Pro? Do you think paying for the platform and data for the whole year to learn to tape read, if that's how long it will take, or is there any alternative? So I get this question asked a lot. A lot of people would ask me, am I good with just something like Thinkorswim or E-Trade Pro or some of the more free platforms? And I would definitely say absolutely not. If you're new and you're starting off as a day trader or a trader in general and you want to learn the basics of tape reading or charting, using a platform like Thinkorswim or E-Trade Pro is fine. But after a certain point, you're going to have to, so to speak, graduate onto a more complex, not necessarily complex, but more sophisticated platforms such as Dash Trader Pro or Sterling Pro or Realtick. And there's a reason why those platforms are able to charge, whatever they charge, and people still use them and they still have business, right? It's because you get what you pay for. They're actually very good platforms, and the level 2 is like night and day difference. It doesn't lag. Thinkorswim and E-Trade Pro, they can't handle a lot of information all at once. So you got to switch to a Dash Trader Pro or something like that, which can handle a lot more data, a lot more information going through. And you notice it a lot more at the open or in the situation where you have like a huge flash crash or something like that, where your level 2 is just gonna freeze. It completely messed me up. You're gonna lose a lot more money doing this on trying to tape read on Thinkorswim and E-Trade Pro versus trying to tape read on Dash Trader Pro. So don't skimp out on the couple $100 in data fees, guys. Definitely switch to the more sophisticated, the more faster level 2. Next question comes to us from Uriel, who says, how much would you recommend someone start trading with? I've been studying stocks and have unsuccessfully traded for about 2 to 3 years, and I'm currently saving a good amount to start. So this is another very good question. I personally started with $6,000, and a lot of people would ask me if I would ever recommend that they would start with $6,000, and I would say absolutely not. You can start with $6,000, and that's fine, but you have to be very particular in the way that you trade. But I feel like with respect to fees and with respect to the opportunities out there, you're going to spread yourself too thin, and you're just not going to have enough margin for error, so to speak, to be able to account for those fees and commissions. So while it's not impossible, and I'm living proof that I was able to start with $6,000 to get to where I am today, it's a very difficult and tall order for most. And it's something that you got to understand. If you're willing to take that risk, it's with $6,000 or whatever that you're willing to lose. So a lot of people would start with maybe $10,000 or whatever. That's fine as well. And you can open up an account and start with that much money. But understand that, the closer you are to PDT, say you have like $20,000, I would say you're better off saving for the extra $5,000 and then opening up a PDT account, so to speak, than to just go in, dive right in, and then with the $20,000 get stuck with the three day trades in 5 rolling business days PDT rule, and then you might end up doing something stupid that you're forced to do because of the rule. So, if you got like $5,000, $10,000, that's fine, but just understand the risk and and the limitations, so to speak. Next question, what's your average account trading size? I know you adjust depending on market conditions, but what are you normally trading when you find good setups? So as I mentioned in the no blow up challenge, which I'll talk more about later, I started to limit my account down to around the 30, 35 on the upwards to about the 50K range. Reason for that is I felt like, you know, with my data that I studied with my in my Excel sheets and my journaling, I started to notice that once my account got over a certain threshold, you know, trouble starts to ensue, right? You start maybe using too much size, you start oversizing, you know, you start succumbing to a lot more emotions, so to speak. So as a preventive measure, I would limit my account to around the 30 to 40K. That's a good threshold. You get closer to 30K, you know, you got a little bit of a smaller margin for error, so to speak. But 40K is a sweet spot for me personally. So around that price point, it's really good for me to have a nice cushion, or a good $15,000 cushion over 25K, while at the same time I'm able to limit my buying power appropriately and size appropriately, and not make any bad decisions based off of emotions. So try to keep it around 30, 35, 40K-ish. Next question, Gerardo. I'm a new trader who's been following you for a while. I feel comfortable enough to start trading with real money, but don't have enough to set aside to start without the PDT rule. Do you suggest an offshore broker like SureTrader, or do you suggest sticking with a broker like TD Ameritrade and build up the account slowly? Also, what broker do you use to trade, and do you use a different broker for shorting positions? So this is another very common question I ask for people that are below PDT. Is it something that you would want to do, you know, to go and open an offshore broker? And most of the time, I would probably say no. I mean, there's some people, I don't want to say definitively no, because I know there's some people that have used them and they had no issues. But personally, for me, I've never used SureTrader because of the fact that they're based in the Bahamas, and I really don't want, you know, these guys are not regulated. They're not subjected to U.S. laws and regulations to just one day decide, hey, you know, I'm just going to take all your money and just, you know, boom, they're gone, you know. So I don't want that happening to me. I'm sure nobody else wants that happening to them. But again, I don't have any personal experience with them. But personally, for me, that one fact alone is enough for me to deter me from putting my account, especially a lot of money, like, you know, tens of thousands of dollars in an offshore, unregulated, not secure account. I probably wouldn't do that. But if you got like a couple $1,000s and you don't mind losing it, like for example, like sports betting websites are all usually offshore. So if you want to put a couple thousand in, and you know, if something happens and you don't really mind, then fine. But in most cases, I would say probably not. And definitely, I started with E-Trade. I moved on to Ameritrade. I stuck it out through the thick and thin with the PDT rule, and you know, I'm here today. So you know, it worked out for me. I can only speak for myself, but it definitely worked out for me. Right now, I only use one broker. I use Centerpoint Securities. I don't use any other brokers, so I use them for both my long and short positions. Can you please explain what does it mean when a stock is halted, and what does it mean if you have a position in the stock when that happens? Halts, there are different types of halts. There's a T1 halt, which is news pending. T2 halt, which is when the news is released, and T3 is when a T1 has resumed. T12 is obviously one that I know, unfortunately, all too well. That's one where like it's the NASDAQ or whatever, they request more information. That's when usually when a stock runs up like crazy and there's no explanation for it, and there's usually no news that goes with it. And as a result of that, a lot of times the NASDAQ or whatever, they might just jump in, the SEC, they might just jump in and be like, you know what, no, we're going to have to stop this stock. It's going way too crazy. And yeah, in that situation, you're kind of at the mercy of the market. You know, that's the nature of things, and that's the risk we got to take. And you know, we got to understand that sometimes that can happen, and we got to deal with it. So just understand that, and you know, when you're trading a stock that's up a lot with no news, just be careful. understand that a T12 can happen to you, and then you're pretty much at the mercy of whether the stock can gap up a lot, gap down a lot. We've seen stocks that come back from T12, they gap down like 70, 80% or something like that. So you got to be careful. All right, guys. Next question. Hello, can you explain all the parts of the strategy that you use to trade stocks, like entry point, stop, exit, position size? So this is a pretty broad question. With regards to entry point, obviously you rely a lot, at least for me, I rely a lot on technical analysis, support and resistance. So basically you want to identify which supports and resistances are the more, shall we say, more like there's hard supports and hard resistances, and there's soft supports and soft resistances. You want to find the ones that have the most weight to them, the ones usually with the most volume, stuff like that. And I would put more emphasis on that. For example, if you're using, like I say, a longer time frames support and resistance, and they match up with a lot of multiple time frames, like maybe there's a support that shows up on the daily chart, the 15-minute chart, 30-minute chart, 3-minute chart, then I'd probably put more weight on that. So I would use that as an entry point. I would wait for a breakout, buy the dip, as you guys have seen in the past. Same thing with resistance. You find a resistance level that's shown up on multiple time frames, put more weight on them. A lot more volume usually typically trades during those resistances, and I would use that as my exit point for a long or an entry point for a short. So general rule of thumb, you just gotta identify where the key supports and resistances are, and where are the ones where it's just more like a soft support and a soft resistance. So that's usually what I use to determine where my entry points are and my exit points are as well. Jesse, my question is, how do you manage risk after entries? I'm assuming you do not use stops. I do use stops. I don't know about that. So are you looking for strong tape reversals, or do you have a set 2-cent or 3-cent risk as a signal to bail? Been looking to add washout long to my playbook, but noticed that using tight stops tend to wick me out, preventing scalp profits from really adding up. Okay, so this question is basically, it's trying to say, okay, what do you do when you try to stop out, and how do you essentially play the washout long without getting stopped out too quickly? So what you usually do is you identify the same thing, continuing on the previous question. So we have a support and resistance. We wait for the stock to break a little bit below support. Usually sometimes they do the wick back, what I call the wick back. They'll fake you out. They'll take out all the stops, they'll fake you out, and they'll wick it back up, right? So
he's not fucking picking up our message.
So a lot of times what we do is, like, we wait for the stock to drop below a little bit. Let's see if it confirms the move lower. So I will wait for it to bounce back, and then I'll stop out if it fails to regain that level. So for example, if a stock has a 5 as a critical support level, let's say it drops to like 490 or something like that, I would wait for it to kind of hang around there a little bit. And if it doesn't bounce back to 5, then I'll just stop out. So that's usually my way of preventing that. So next question, John, what's the best way to handle your emotions and keep them in check when entering a trade? I know discipline is what's needed, but when I enter a trade, I feel my heart pounding and I get emotional if I lose. I want to have a handle on this to further improve my trading, hoping you can provide some insight. So this is a very good question. This is something that I'm going to actually really focus on as part of the Madaz money trading community. I feel like most people don't put enough emphasis on the psychological aspect of things, you know, mental capital and things of that nature, and just discipline, FOMO. And overall, I think we got to understand that that's 80% of the game, right? Anyone can read a chart. Anyone can eventually learn how to read level 2. Anyone can memorize chart patterns, definitions, and what have you. But eventually, we got to understand that most of the game, the majority of the game, is psychological and emotional. So with regards to your question, John, the best way to do this is you should probably downsize your position so small to the point where you still are in the trade, you still have a monetary investment in the trade, but at the same time, you're going to be more detached from your emotions, because the amount of money that you're risking is so small that you're able to manage the trade, you know, more objectively and more detached emotionally. So understand that if you're in too big, you're probably going to be freaking out, because you're probably watching every single tick, because you're like probably losing a lot of money that you probably can't afford to lose. if you're forced to watch every single tick because you're probably oversizing. But if you downsize, you still got the monetary investment, but at the same time, you're less emotionally invested, if that makes sense. All right, guys. Next question, Trevor. When did you, when you did your no blow up challenge earlier this year, what were the rules you implemented? I've had a good year, but this past month I've fallen into a losing streak that I can't seem to shake, and I'm just bleeding cash. Starting tomorrow, I'm going to be using much smaller size and only focusing on quality setups. Would like to know if you have any other suggestions. So this is a good question, and there's a really good reason why I put a follow-up to this question to the previous question. It's a good follow-up, and with regards to the no blow-up challenge, obviously that was a thing that I implemented earlier in May, and that was something that I really wanted to make a point of discipline, you know, emotional control, emotional restraint, and controlling FOMO, essentially not oversizing into inferior plays. So, Trevor, with regards to your particular case, I would definitely, again, just to reiterate what I said before, just keep downsizing, man. You want to keep learning. You want to keep learning how to trade while minimizing your emotions, right? So that way, again, you have monetary investment. You still make the trades, real trades, not paper trades, real trades. That's the key here. You gotta make some real trades where you're actually risking some real money, but at the same time, you gotta understand, you know, you gotta eliminate the emotional factor. Okay. So once you get rid of your emotions, then you can start sizing up again incrementally, and the key word is incrementally. Okay, you start at 100 shares, you don't jump to 10,000 shares. Go 100 shares, 200 shares, 300 shares, and so on. And eventually, as you move on and on and on and on, then you can start to develop over time. Okay, now I know what I'm doing. Now I know what I'm doing. I got my emotions in check, and eventually you'll figure out how to put two and two together. You got the technical aspect down, and you got the emotional aspect down. So it all stems down from downsizing and eliminating your emotions over time. It's not going to happen overnight, but you got to start somewhere. So I definitely recommend that you start small and smaller and smaller until you understand, okay, my emotions are in control. And like you said in your question, only focusing on quality setups. Definitely identify your quality setups, stick to your quality setups to give you the highest win rates, and with appropriate sizing, you'll be able to work your way up. All right, next question, Steven. My question relates to MMs, algos, and HFTs. How do their job responsibilities differ? Because a lot of people use these terms interchangeably, and how do you take them into account when trading? So I'm not a market maker, and I don't use algos or HFTs, but the bottom line is market makers, they have a job. Okay, they're there to quote unquote make the market, but the way I see it, they're basically there to take money from guys like us and to line their own pockets. So in my opinion, it's the best to identify and understand how algos and HFTs work, so that way you don't essentially hand them your money. So I always talk on Twitter every single day in my live trading commentary, essentially, where I talk about, okay, you know, the algos have taken over, right? The volume's getting too low. The algos are taking over. It's grind time. It's lull hour. That's essentially time for the algos to just keep taking out stops and just like work you and just take your money, essentially. And it's best for us to identify when it's time for the algos to really take over and understand what their function is. Okay, they're there to take our money, essentially. Okay, so just be careful during the low periods of time. That's usually typically when I notice that algos really start to chop people up. You guys see me talk about that all the time. So once that happens, you just gotta be really, really careful and just understand their function. That's really it. I'm not really here to really dwell into what exactly an MM is or whatever, but I just care about more or less how they impact me and how they impact my trading. So understanding that, it's my best interest to identify where they're going to kick in, where they're really going to start taking over, chopping people up, and just avoid it. That's all I care about with regards to market makers, algos, and HFTs. Next question, Jason. I was wondering, how did you get your monitors set up like that? I have the same setup, and I was wondering, how did you set your trading platform up on your new monitor like that, and what resolution are you trading in? So I'm going to do a video more about this because this is actually very interesting. I believe that buying a 4K monitor, especially a 43-inch 4K monitor where everything's really big, nice and big, is a game changer. So if all you guys out there that are kind of waiting on getting that 4K monitor, I highly recommend it. And I'm going to make a video specifically about this so I can talk about it more in detail. I don't want to take too much of everyone's time just to dwell on this question, but it's a game changer. I trade in 4K resolution. You could fit like 20 charts if you wanted to. You could fit like 16 level 2s or whatever. It's absolutely amazing. You could see everything. You could, like, if you made the chart full screen, you could see like lots of stuff. So definitely get that 4K monitor, guys. It's getting lower and lower in price. I know when 4K first came out, it was like $1,000 bucks, but now it's like you can get a monitor for like, I got my monitor for $399 on Black Friday, guys. I mean, you gotta jump on that deal. So the next time there's a deal like that pops up, I'll post it on Twitter for you guys, so you guys can all take advantage of that. True or false? Most traders are not profitable because they do not trade or know how to trade setups to have an edge. Lou. So I believe traders by definition do trade. That's definitely takes part of care of that question. But traders fail because they can't keep their emotions in check. Okay, so number one, if they can't even find setups that determine an edge, then you already pretty much are not going to make it for sure. But there are people that have identified setups that give them an edge, but they can't keep their emotions in check. So it's more like a two-step process, right? Which is why I want to focus a lot of the Madaz Money Training Community on mental conditioning, on mental capital, preserving mental capital, and emotional restraint. So the first step is obviously to identify your grade A plus setups. Once you have that down, then it's a matter of executing it with emotional control. So if you can't even identify your setups that have an edge, then you're pretty much done before you even got started. Compare your trading now to when you first started. What has changed? So this is a pretty good question as well. It's a very broad question, but I'm gonna give a more short and concise version of this. So when I first started trading, obviously similar to most people, I didn't know what I was doing. I was following other people, and then progressively over time you start to learn certain types of patterns. So for me, tape reading became my thing, and over time you start to understand that there are little things that you kind of see, like, you know, you guys know that if you stare at something long enough, you eventually start to see certain types of patterns, right? So over time, you know, you just get used to certain things. It becomes second nature. You internalize it. So for example, for me with tape reading, I started to figure out where like the washout longs would stop, right? Where the panic pop shorts would stop. Like, so where I could spot support and resistance essentially on the level 2 and on the tape. So this is something that I was able to develop over time, and it's a huge part of the reason why I feel like I have an edge in the markets, because the average person can't do that. The average person doesn't have a quick enough eye to spot support and resistance on the tape, on the level 2, where the bids are, where the offers are, and where the brick wall is, and where the bid props are. These are things that I picked up over time, and it essentially was a byproduct of screen time. Just countless hours and hours of screen time, just staring at the level 2 nonstop. So that was one thing that changed from when I first started, because sure as hell when I first started trading, I had no idea what level 2 was. They looked like completely like a different language, like hieroglyphics to me. So definitely over time, is if you stare at something long enough, you'll get the hang of it, hopefully. Next question. In your video, could you explain your process when getting out of a losing trade? I'm just a scalper like you, and would like to hear about your thought process on this idea, which I believe to be the most important part of trading. At which point does conviction turn into being irresponsible? Is there a certain way your strategy has you cutting losses? Do you stop out into strength whenever your mental stop is hit, or will you wait for a pullback to get out after the price crosses your stop? Do you add and then try to get out for break even once you realize you were wrong? Anabolic trades. So this is a bunch of questions, but I'm gonna cram it into one question. Essentially, he's asking me how do I stop out. So again, I use mental stops. I don't use hard stops, because when you use a hard stop, like especially like a straight out stop order, it turns into a market order. I don't like using market orders because sometimes you get like a really bad fat finger fill. So I don't want to deal with that situation, so I use mental stops because I feel like I have more control. But obviously when you're using mental stops, you got to be able to trust yourself a little bit more, right? You got to have a lot more belief that you're not going to like randomly adjust your stop in the middle of stopping out, right? Oh, you know, I'm just going to let this ride for a little bit more or whatever. That usually ends up in a much bigger loss 9 out of 10 times. But again, for me, I personally would wait for the stock to hit my stop and then wait. Give it a couple seconds to see if it's a fake breakdown or whatever if I'm long, and or a fake breakout if I'm short. And if it's a fake breakdown, then okay, then I won't stop out. But if it keeps going down, it tries to bounce. You see it can barely bounce. At that point, that's when I would stop out. So that's generally my idea when it comes to stopping out. All right, so this is a similar question, but dealing with size. So in this particular case, I would probably scale out of the trade because trying to stop out with 50,000 shares is probably not a good idea. So if you notice something, if you're in size in a stock, okay, and you realize that something is not working out, I would probably lower the size to the point where it's more stop outable, for lack of a better term. So for example, if you're in 50,000 shares of a stock, right, and you notice that you're in it for a bounce, right, and you notice that it's not bouncing, what I would do is I would actually start downsizing my position as the stock is not bouncing. So if I'm in 50,000 shares, maybe I'll just sell like 5,000, 5,000, 5,000 or whatever, until I'm in a situation where I'm only left with maybe at most 10,000 shares. And if I have to stop out with the 10,000 shares, then it's a lot less of an issue, right? I mean, the slippage isn't going to be as bad as trying to stop out of 50,000 shares. So what I would do is if I'm in full size, the trade via YouTube. It looks like the stream crashed. Give it a second. Okay. Okay, looks like we're back on. Okay. First, thank you for all the free knowledge you provide via Twitter and YouTube. You're welcome, Steven. My question is, do you have a starter size and scale in, or do you go full size when the move happens? This is a pretty good question. So if a stock has only given me maybe like a B or C type setups, for example, let's just say I'm looking for a washout and I'm looking for like a major washout that's dropped like maybe like a buck or something on a stock. Then if it drops a buck in one candle, then I would go in bigger size because you have bigger bounce room, right? You have a bigger risk reward, okay? So if your stock has dropped further, there's a higher chance that it's going to give you a bigger bounce. Now, would it always give you a bounce? No, obviously not. But the chances are, you know, you drop a ball, like the bouncing ball effect, right? You drop a ball from a higher height, it's going to bounce more, right? Drop the ball from like a lower height, it's going to bounce less. So if a stock is dropped higher, then there's more likely of a chance that it's going to bounce more. So in that particular case, I would go in a little bit higher because I know there's more profit potential. Now, if a stock has dropped and bounced from a lower price, a smaller range, then I'll probably scale in smaller size just because there's a small chance that it might do a fake bounce and then drop to the next level where I initially was going to go full size anyway. So that way I'm not fully committed to the trade. So it's all about understanding your setups and knowing, okay, this is the A setup, this is the B setup, this is the C setup, and then identifying the appropriate and corresponding sizing parameter to go with each setup. That's all it really is. I highly recommend you guys take some time and identify which positions, which type of trades, which type of setups go with which position sizing. So definitely spend a day, figure that out. It will really help you. So that way you're not arbitrarily just going in random share size for the sake of doing it. When you're buying a washout long, how do you decide when to exit when the trade doesn't go in your favor? Or for example, I see sometimes on your charts when the stock goes down, you'll add lower and exit on a pop. So when would you decide to sell when the stock is either hovering around your entry point or going down? So this is a follow-up to the last question. So essentially, you scale in half. You scale in half at the first support level. If it's a soft support level, you scale in half, and then what you need to do is you predetermine a max size that you're willing to go. So if I say I'm willing to go in 5,000 shares max in this trade no matter what, so it's up to you to allocate those 5,000 shares over, you know, the support levels that you wish to buy the stock at. So let's say there's 2 support levels, 5,000 shares tops, then I'll just go 2,500, 2,500, and then if it goes below the second support low, then I just get out. Simple as that, guys. So it's always about making things black and white, not leaving things up to subjectivity, not leaving things up to interpretation. It's pretty simple, guys. Like a lot of people, it's hard for a lot of people. Again, it all goes back to mental restraint, emotional control, and all that, psychology. And I'm going to get more into that later. I really think it's a very critical point. So it's on top of just coming up with a predetermined plan. You got to execute it with mental clarity. And when it comes to that, it's hard for a lot of people. So again, to answer your question, Daniel, it's a matter of just identifying your setups. And then once the stock breaks that last point and you've already hit your predetermined allocated max size, you got to have the discipline. You got to stop out, wait for the next opportunity if there is one. And if there isn't one, can't revenge trade, can't FOMO. It is what it is. You got to accept it. You know, that's how trading is. It's about opportunities. Take advantage of the opportunities that are there. And if there's no opportunities, you know, sometimes the best trade is no trade. All right, Brian. Interested in your strategy for ads? Do you add to your position if it proves to be correct? So this is a different scenario as opposed to scaling in on a stock when it's going down. This is adding it when it's going up. So sometimes I would do this. Usually I don't do this, although this is a pretty good strategy for a lot of people, especially for swing traders and intraday swing traders, because I usually exit on the pop and try to get back in on the next wash anyway. So essentially I am adding, but I get rid of my first position. But this is really good for people that are building a position for a longer term swing trade, or at least an intraday swing trade, and they're planning to hold it for a couple hours to the end of the day or something like that. So instead of selling your first position like I normally would do, what you could do is you could hold your first set of shares. Let's say you buy 2,500 shares, 2,500 shares, stock goes up, pulls back, you add another 2,500 shares, you ride the trend. And then you set up again the same thing. You set a predetermined position sizing. You don't just keep adding to infinity in case something happens. You know, you're gonna get destroyed. So you set a predetermined max size. You allocate it over time. You have a plan. Let's say you add 2,500 shares. Your max size is 5,000. You wait for the next pullback. You add another 2,500 shares. You identify the critical resistance level, which you can pull from the daily chart, or whatever, a longer term chart. You can use whatever you want, and then you end up selling it at that point. And that's it, you know. So definitely this is a one way to do it. It's the same thing. Essentially, you just don't sell your first buy. So same thing for the shorts. I don't add, so to speak, but what I do is I cover, and then I wait for the next pop, short that, cover, short that, cover, short that, cover, essentially riding the trend on the way down. This is something that's a little bit more difficult for the typical trader to do, so, you know, if you can't do it, it's fine. A lot of people just like to have that sense of security of knowing that they got a good average. I guess that's why a lot of people would do that, something like that. They got a good average, and, you know, they like to see the fact that they're up in the trade, up unrealized in the trade. I guess that helps with the psychological aspect for a lot of people. But for me personally, I'm comfortable enough to just take my profits, get back in, take my profits, get back in until the trade no longer works, until the trend no longer is valid. If you were to grow a small account, let's say 3K in current market environment, would you use your strategy, or what would be your game plan? So again, I started with a 6K account, and I've always have been a bounce player. Like a bounce player, I would play stocks that have been overextended to the downside, go in, and that's always been my strategy. Obviously, it's been refined over the years, but I will definitely stick with the setups that give you the highest risk reward, the biggest profit potential. You're in a 3K account. If you're subjected to PDT especially, you only got 3 trades in 5 days. So what you need to do is you got to find the trades that give you the biggest profit potential, right? So that way you get the most out of your 3 trades. So identify your A+ setups, the ones that give you the highest win rate, and at the same time the ones that would potentially yield the most profit. So you want to stick to the grade A setups, the ones that won't. Essentially, you want to be efficient with your trades. So you got 3 trades. You want to use it on trades that are worth it. Essentially, okay. So identify your grade A setups. It might be different for you. For me, it's the bounce plays, for the washout longs. For you, it might be something different. but I feel like washout longs give you that quick, nice little 10-15%, sometimes more gain, like a 30 seconds or something like that, and that's really, really good for somebody like me that likes the fast money, kind of fast-paced environment. But overall, you could do this with swing trading as well. If you find some nice swing trading patterns that give you a nice 10, 15, 20% yield, nothing wrong with that. But overall, just stick to your grade A setup, stick to the high risk reward setup, stick to the high percentage setups, and you'll be able to grow your small account. Okay, so this question was already asked. How do you wait for candles to make their long or short momentum known before making your trade? A lot of the price action is in the first 5 minutes. Wondering your approach, Emil. So a lot of times I'm at a point where I can predict what happens in a candle. A lot of people like to wait for the candle to close or whatever to really make a decision. But for me personally, using support and resistance and tape reading is very essential. And this is why I like to favor tape reading as opposed to chart reading, because I feel like the guy that's using the tape is going to be a step ahead of the guy that's using the chart. Okay, because the chart, I feel like there's no depth to it, right? And that's why level 2 is called market depth. And I mentioned this in my trade chat with traders interview. Market depth allows you to see beyond that first dimension, right? You can see what's beyond the horizon, so to speak. I can see beyond the best bid, and I can see beyond the best offer. So that lets me see where the stock may be going in the next, couple seconds or what have you, right? And this is very key and crucial data for me to determine that. So if, for example, the guy that's looking at a chart and who's waiting for a candle to close, by the time he's done waiting for the candle to close, for me personally, I think that's too late, because I'm on the level 2. I already spotted the big bid, right? I already spotted the bid prop. I already spotted the guy that's like that put up like hidden size or whatever. I see like a bunch of green on a tape, a bunch of whacking on the offer. I've already seen the tape already switch momentum to the buy side for my washout long. By the time you're done waiting for your candle to close, that wick has already formed and you're already chasing my stock, and I'm probably going to be selling it back to you. So you got to understand that overall, I feel like, I think if you're reading a chart, it's just too slow in my opinion. You gotta eventually switch over to tape sooner or later, especially if you're a fast-paced scalper like me. If you're a swing trader, I believe charting is fine. I'm not gonna go and jump out of my lane here, so to speak. But when it comes to day trading, when it comes to scalping, we're talking a game of microseconds, guys. So tape reading is king when it comes to that. So I believe, Emil, you're probably asking about momentum trading. So I want to shift more of the conversation more toward the momentum side of things. So definitely tape reading is something that you probably want to start to dip your toes in. What 3 pieces of advice would you give someone to help them stay in the trading game and not get wrecked? All right, so this is a pretty interesting question. So number 1, I would say learn how to manage your risks, learn how to size properly, give yourself a chance to learn. I think the problem for a lot of people is that they don't give themselves enough time to learn. Everyone jumps into trading. They want the freaking $1 million trade overnight, right? Let's just go all in. Let's go all in options, Friday expiration, lotto play, and try to hit the 10,000% winner, right? Let's be honest, that's not going to work out. You might as well just go to the casino, put it all on red. It's a lot faster, right? You'll find out if you're up or down in like, 30 seconds. But in this particular case, I think a lot of people don't give themselves a chance to process the data, process the information, process the strategy, and understand trading as a whole before they lose all their money, essentially. They just overextend themselves, they overexpose themselves to the market, and by the time they lose their money, they're like, well, whoops, that's it for me, I'm done. Pack your bags, go home, I'm done, because I got nothing left, right? You don't give yourself a chance to learn. So I think a lot of people that jump into trading, they jump head first and they just dive off the deep end of the pool, and they just don't give themselves a chance to learn. They don't learn the platform first of all. This is where paper trading comes in, by the way, guys. Paper trading is obviously, there's pros and cons to it. Everyone understands that, you know, there's no emotion because you're not trading with real money or whatever. But when it comes to paper trading, you're actually learning the platform. So that way you're not fat fingering, you're not hitting the wrong button, you're not hitting short when you really want to buy, you're not, you know, punching in 10,000 shares when you meant to buy 100 shares, things of that nature. So learn the platform, learn the platform via paper trading, via the demo account, with regards to risk management. Size appropriately, incrementally size. Don't jump in from 100 to 10,000 shares. 100, 200, 300, 400. Give yourself a chance to learn. Give yourself a chance to identify the patterns. Give yourself a chance to see what's going on and actually learn how to trade. So I guess the last thing is, I'm going to talk more about this in the future as well, is the first step is making money. And I feel like a lot of people don't focus on capital preservation, saving money, right? So people focus on making money, and a lot of people that post the big P&Ls, you always see them, you know, 10K days, 20K days or whatever, and then, you know, all of a sudden they start posting negative 10K days, negative 10K days, negative 20K days. And this is a good example, and I used to be there myself, so I'm no saint myself, but I as part of the no blow up challenge, I really wanted to focus on, you know, how to mitigate this. Okay, so this is part of risk management. This is part of capital preservation. Okay, and capital preservation is keeping the money that you've already made. What good is that $10,000, $20,000 that you've made if you're just gonna give it back the next day or the next week or the next month, right? We've seen this one too many times, and I believe that a lot of you guys probably experienced this at some point or another. Okay, so capital preservation is the third advice that I would love to give to traders to help them stay in the game. Keeping the money that you made. Okay, again, risk management, not FOMOing, not revenge trading, not taking a trade if there's no opportunities in the market, no grade A setups. Forget it. I'm gonna go, you know, trader nap in that little awesome bed that you guys are, you know, should get fond of, because this bed has saved me thousands and thousands of dollars. This is the trader nap bed right here, guys. Gotta show it some love. So take your nap, go for a walk, go to the park, whatever. Just don't lose your money. Keep the money that you made. Don't give it back to the markets. The market makers would love to have your donation at any point in time, guys. So capital preservation, I'm going to talk more about it in the future. Very important topic. Can you tell us your process for evening research or after hours research in looking for trades the following day or trades to watch the following days? So what I usually do is at the end of the day, you guys probably noticed me on Twitter. So after I have my trader nap, I come back during power hour. I usually don't trade during power the last like 30 minutes because usually that's when like a lot of shenanigans happen. You know, market makers usually shuffle order books, margin calls, and whatnot, things that you can't really control. So I don't want to deal with that stuff. So the last hour, I usually watch to see if any stocks that are running that particular day are holding up for the next day for like a washout long. So you guys noticed that me on Twitter, I would say things like, oh, like stock XYZ is surviving for the next day. So that basically means the stock's holding up. It hasn't given back its entire move, and I'm gonna keep it on watch for the next day. And then for the next particular morning, obviously I have my scanner, trade idea scanner, and I look at the gaps, and then I add to my watch list. So that's pretty much how I build my watch list. I don't really spend that much time in the evening doing any particular research or anything like that. I just look at stocks that are in play the previous day, make sure they're still alive and well and surviving for the next day. Add that to my watch list on top of, you know, the scanners, the gap scanner stocks from the next day, the following morning, and that's how I have my watch list. Narrow it down to maybe like a final, you know, 3 or 4 by the open, and it ends up being one of those, ends up being the stock that ends up being the, you know, the crazy runner that day. So that's pretty much what I do. I don't do any intense research or anything like that. I'd probably spend maybe at most like an hour or so looking at those charts. But again, if you're new, you know, I've been doing this for 7 years. So if you're new and you need the research, by all means do it. I'm not saying that you should spend only an hour, but if you're new and you need several hours to do it, no harm in that. I used to be in grad school, you know, not paying attention in class and using the computer to look at charts all the time, you know. So I've been there. So definitely there's nothing wrong with that. Nothing wrong with that at all. Just get the job done, guys. Do you use market orders when entering a very quick momentum trade? One word, No. I don't want any fat fingers. What are key factors you consider to estimate after a run-up whether the stock is a buy the dip or to stay away as an infinite dump? Time of day, tape, volume, float, news, etc., etc. It's a very good question, Juan. So this, I have a video about this on YouTube. So there's this video called, I believe it was on IDXG, how to tell when a stock is not going to bounce. So this is a pretty good video. Definitely check it out on my YouTube channel, Madaz Trader, of course. And with this regard, I would say that later in the day, it gets sketchier. Okay, later in the day, the action is a lot sketchier than it is in the morning. Okay, so usually when the volumes are a lot lower, which is one of the things that you mentioned in your question, a lot lower volume usually indicates that it's a lot more difficult to read the action. Okay, there's probably can be a lot more slippage especially if you're holding size in the low volume. You gotta be really, really worried, because if you get stuck in an infinite dump out of left field and there's no volume, well, guess what? You're pretty much in a pretty bad spot. With regards to knowing whether or not it's a buy the dip versus an infinite dump, obviously in a downtrending stock, infinite dump is probably more likely. You don't want to be buying. You don't want to be swimming against the current, so to speak. You don't want to be buying, catching a falling knife that's been falling for a while. So you don't want to be buying the dip on a downtrending stock, especially in the afternoon. Infinite dumps are usually when stocks are breaking through multiple support levels like they don't exist. So if a stock is breaking through multiple support levels, and especially if a stock has been holding said support levels throughout the course of the entire day, it's probably in your best interest to not try to buy the dip. Like stocks and trading in general, they're about pattern recognition, right? And patterns are valid as long as they're still valid. So the patterns are true as long as they're still like, you should follow that pattern as long as there's a reason for you to keep following that pattern. So if the stock has been a buy the dip all day, holding support levels, and at the end of the day all of a sudden decides to bust through 2, 3, 4 support levels like they don't even mean anything, well, it's probably in your best interest to stop buying the dip, right? So understand patterns, guys. Once patterns are broken, be it on a micro level, be it on a macro level, it's probably in your best interest to just stop trying something that previously worked, because it's most likely not going to work moving forward because now something has changed. So understand that. Hopefully that answered your question, Juan. That's a very, very good question. I love that question. What single strategy would you recommend a beginner to focus on? Paul, this is a very difficult and very broad question to answer. Depends on your style. If you're a scalper, again, washout longs are pretty good because it yields a really nice gain in a short amount of time. If you're a swing trader, obviously, you might want to look for some longer term setups, maybe some double bottoms, maybe some chart patterns to form, and maybe you want to stick in some moving averages, some Fibonacci retracements or extensions to help you determine some wider, longer term support and resistance levels for you to capture a bigger move. And obviously size it appropriately so that way you can stomach the swings, because obviously if you're in a swing, longer term swing position, you're inevitably at some point going to deal with a part of the chart where the stock is moving against you, right? If you're long, the stock's not going to go straight up forever, right? There's going to be some dips. If you're short, there's going to be some pops, and you're going to have to be able to size it appropriately and be comfortable with those swings. So understand what you're dealing with here, understand your risk parameters, and then just understand what patterns you need to use to apply to what you're comfortable with. Is it possible to trade your strategies with a full-time job? This question brings me back, Michael. This question definitely brings me back. I did have a full-time job. I worked as an engineer for 3 years at an office, and I don't recommend anyone doing this because I don't want people emailing me saying that they tried to trade on the job and got fired. But you can buy one of those screen glare things. I don't know you guys know what I'm talking about, but the things where you put it on your monitor, it's like it's like a shade. It's kind of like sunglasses for your monitor, so to speak. No joke, you could stand next to somebody, literally sit right next to them, and stare at the screen with that shade on, and you still can't see their screen. No joke. I'm not recommending anybody go out there and get one and put it on their work computer, because your boss is probably gonna think that you're gonna be doing something shady, pun intended. But it's pretty ridiculous. But I traded while I was on the job. Don't recommend it again. I did my washout long strategies. I at the time it was penny stock pump and dumps. I would get up, drive to work early and buy the pump pre-market or whatever and play the pump. But definitely I played the bounce strategies while I was at work, and it's really good because there's such a short-term trade that you can just get in, and then once your boss walks by, you close the window and you get out, right? Alt tab, baby. So you know. It really worked out pretty well for me because there was just such short-term trades, like 10, 15-second, 30-second trades, maybe a minute, 5 minutes, whatever. And if I hear my boss footsteps coming by, I'll be like, oh boy, Alt-tab, get out. And you know, you can also use your phone as backup. I use my phone as backup as well. But yeah, definitely you could trade my strategies while you're full-time, and especially since if you're in the Pacific time zone, which is where I'm at, or even earlier. You know, the market opens at 9:30 Eastern. In the Pacific time, that's 6:30 Eastern. So you can actually get up at 6 a.m. before work, sneak in the washout long in the morning, make your $5 grand, and then go to work with this big smile on your face. Ear to ear, baby. You know what I'm saying? So, hey, it works. It worked out for me. I'm here today. I'm no longer working. I'm financially independent now. So, hey, if anything, that's inspiration to you guys. You guys can do the same. Just don't get fired. Just don't get fired. That's my one advice to you. All right. Okay. What is your pre-market routine, and what do you look for in stocks to trade, and what stocks do you avoid? For example, really tiny low float stocks or something else, because I have a hard time filtering the good stocks. All right. So again, I use Trade Ideas as my gap scanner, as my scanner in general. I use Trade Ideas to find the gappers pre-market. I sort them by the largest gaps, largest percent gap on the day. I also look at the volume to see how much volume there is pre-market, to see how many eyes are on the stock. And I generally avoid higher institutional ownership stocks because they generally have a lot more of an agenda behind them. There's a lot more algos messing with them. There's a lot more, shall we say, inorganic or unnatural behavior, so to speak. You guys might have heard me throwing that term around from time to time on social media, on Twitter in particular. But generally speaking, I try to find stocks that where I have an edge, where I feel like I can predict them a lot more easily. And for me personally, it's the lower float stocks. Tiny float stocks I don't have a problem with. Just size appropriately to deal with the spread and the slippage. But my pre-market routine is essentially to get up about 15 minutes, 30 minutes before the market open, look up the gappers, rank them by priority or preference. So some people prefer a float of 10 million or higher. Some people like 5 million. Some people like $10 stocks. Some people like sub $5 stocks. So just sort them by preference. For me, I'm comfortable with anything $10 and under, or even $20 and under. As long as it has the volume, as long as the institutional ownership isn't that high. And for me, high is around 35-40% or higher. 30% you start being a little bit cautious. But I'm pretty comfortable in most stocks. If a high institutional ownership like Amazon or Apple or was in play for whatever reason, I would still trade that anyways. But if I had a choice, I would stick to the lower float stocks, sub $10 ideally, with a lot of volume. Do you buy on the bid or ask, and what's your offset? You have multiple montages running. How do you ensure that the right window is active when entering a trade? I'm sure you've fat-fingered a few times. Yes, I've definitely fat-fingered a few times. Sometimes I'd like to forget about them, but it's going to happen to some people. You're going to misclick. You're going to hit the wrong hotkey. It's going to happen. Okay, so it's up to us to figure out what's the best way to mitigate the effects of that. Okay, so Buy on the bid, offset. So the first part of your question, so that depends. Okay, sometimes a stock is so thick that you don't need an offset. Sometimes the stock has so much liquidity available on the bid or the offer, you don't need an offset. Okay, sometimes the stock has no liquidity, then you're going to need an offset. Okay, so if you guys don't understand what an offset is essentially when you want to put like an order. If you want to short, you put an order like 5 cents below the bid, 10 cents below the bid, 3 cents below the bid, or whatever on the ask. If you want to buy or cover 5, 10, whatever cents above the offer. So again, it's situational. You want to figure out what the spread is like, what the liquidity is like, what the volume is like. You know, essentially how thin the stock is trading, how thick the stock is trading, and that's how you determine that. So in most cases, I don't really use an offset. I don't like to deal with that much slippage. Obviously, if I'm selling and I'm desperately trying to get out of a position, you might want to use an offset there because at that point you just care about getting out. But if I'm looking for an entry and I don't get the price that I want and I don't want to feel uncomfortable paying a ridiculously high price, then I probably wouldn't do that. But in most cases, I just hit the offer if needed. But you guys have seen my article about ECN rebates. I've gotten to a point where I'm so good at adding liquidity that most days I'm at negative ECN fees. So that's another thing. So if you guys haven't checked that out, you know, I have an article called "Getting Paid to Trade." It's on my website, madazmoney.com, and you'll see how I essentially get paid to trade and negate my commissions using ECN rebates. And how do I know when the right window is active? Just make sure you click on that window before you enter the trade. So usually for me, I'm usually just watching 1 or 2 stocks at a time looking to trade. I mean, I'm watching a lot of stocks, but I'm only probably going to look to enter a position on either 1, 2, or maybe at most 3 stocks. So before you enter that trade, just click on that montage. Make sure that montage is highlighted, and then you have your, you know, like the cursor is blinking or whatever. That's how you know it's the right window. So I usually just click on it before I enter the trade. All right, so for this next question, we're going to go ahead and introduce our first moderator, our first member of our team. He is a guy that I'm proud to call my friend for 7 years now, I believe. And he's been with me through the thick and thin, pretty much from day one, from my days of with E-Trade and Ameritrade, the OTC Bounce FNNA days. I'm proud to introduce my good friend, Rob Bid Slammin' Bobby. Rob, are you there?
I'm here. What's up, guys? It's Rob Bid Slammin' Bobby. I have known Max since the OTC days when there were all kinds of promotions and everything like that, and we met during those times, and I can honestly say that Max is one of the best traders out there. You know, he can scalp, you know, better than most people, and he has so many good insights and lessons from all the things he's learned over the years. He's the most transparent guy I know on Twitter. A lot of people just like to post big P&Ls, and then you don't see, you know, maybe a P&L for a couple days. And he's been there. He's made, you know, huge days, 70K days. He's made the $500 days. He's gone through the whole spectrum. And, you know, what's nice about him, he's been honest about things. You know, a lot of people on Twitter are just, I don't know if they're there for self-promotion or whatnot, but I really respect him as a person and as a trader, and I'm proud to call him my friend as well. Anyways, on to the question, am I enjoying life as a trader? Yeah, it's a wonderful, wonderful job, except, you know, there are drawbacks too. If you're under control and you're doing things well, you're managing your size appropriately for your account, things can be amazing. I mean, you can wake up, you know, trade in your underwear, pajamas, whatever, sweats, you know, come to the market, make money in 30 minutes that you can't make in any other jobs, and, you know, kind of leave for the rest of the day. Obviously, you can hold a position for all day too, and some people think you can make more swing trading. Sure, yeah, that's another option too. But personally, I like scalping too, like Max. I've tried both ways, and you know, it's amazing. You know, when you leave after 30 minutes, you go enjoy the rest of the day, and you don't have to stress about fighting with market makers, this or that. Anyways, the cons that I would say is when say you're trading a smaller account. Actually, it doesn't matter what size account. And you decide, hey, this is an A+ setup. I'm going to go in full margin because I love this setup, blah, 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 and you're used to making X amount of dollars. Well, the situation doesn't go your way and you lose, like, we'll just say 5 times your normal risk. Then, terrible feelings can be had, and, it could be one of the worst jobs in the world at that point, because those feelings can linger on. You have to try and make back your losses. You want a FOMO revenge trade. That sort of feelings can be part of the worst feelings in the world. And, so I think it's the best job in the world if you're trading responsibly for your account size. You're not taking any unusually unnecessary risks for what you're used to. Slowly trying to increase, position sizing or whatnot. And you do have freedom. I mean, trading brings fantastic opportunities to travel. You can still make money while you're on vacation. But, again, you're one step away from, losing everything if you're not careful. That's what's so, amazing about the no blow up challenge. I mean, it's the discipline. It's to trade within your means, to trade small size, to be okay with maybe not making 50K a day, but hey, whatever, you could still make a great living. And maybe the 50K is a normal day for you. But, no blow up challenge is important because, you just need to have the mental peace throughout long term. You don't want a roller coaster of emotions each and every day. Oh, I lost like 5K this day. I made 6K the other day. That's not a peaceful way to live for me personally. So yes, my answer is yes, it is the best job in the world, I think, as long as you're responsible. Thank you, guys.
Thank you, Rob. I really appreciate that answer. Good answer. I definitely want to add on to the fact that, when you're trading, you just got all the time in the world. Like, you see me, I travel all over the world, and it's just a wonderful thing. You could take your work with you, and it's absolutely amazing, guys. It's one of a kind. But the thing is, there definitely is a drawback. It is a very difficult gig, but once you get the hang of it and once you figure it out, it's a wonderful thing. And words can't describe what it's like to actually be able to finally trade, get the hang of it, and reap the benefits of being a profitable day trader. So thank you, Rob, for the answer. I really appreciate that, and we're going to go ahead and move on to the next question. All right, so for our next question, we're going to introduce our second moderator. You guys know him on Twitter as Micah Yo, and he is Mr. Top Tick Fibonacci himself, and appropriately, this question is going to be about Fibonacci. So, Micah Yo, without further ado, are you there?
What is up, guys? How are you? Can everyone hear me? Can you guys give me a thumbs up if you can hear me? Awesome. So what is up, guys? This is Micah Yo. Some of you know me, some of you don't. That's fine. I'm very honored to be here speaking with you guys. I have a question about Fibonacci that I'm going to answer for you. But first, I just want to say I'm very honored to be here. Max recently asked me to help out with Madaz Money. And I was all on board from the first time that we spoke. I thought that it was a great opportunity for the community to get together, network, make friends in a positive, no bashing, no trolling, no bullshit community. And that's how we like to live. If you haven't noticed, we don't really entertain the negativity. We don't really entertain any of the BS that we see on Twitter. I personally don't have time for it. I don't want to stoop down to that level. And that's why Max and I have always gotten along, because he kind of follows the same principles. And I've been trading with Max for a long time. I've known him even longer. This guy's legit. This guy blows my mind. I mean, if we're going to be honest, I don't know any other trader that is as consistent as Max on a day-to-day basis. I mean, we're talking about long-term, right? Trading is longevity. This is a marathon. This is not a pump and dump, right? Every single day that Max comes to work, he's focused on one thing, and that's minimizing drawdowns. Max, in a nutshell, his trading is about capitalizing on $500, $600, $700, $800 like moves over and over and over and over again. Very high win rate, very high consistency. And we're very verbal about the fact that if something does not agree with us in terms of risk, we're just not going to participate in it. And that's something that I think is different and that really separates Max from the rest of the traders in the community. And I can say that personally, Max has helped my trading. There's been a lot of times where I've tried to take a very large move. Everyone's gotten FOMO. It's part of the game. It's part of this career. You're going to learn the good, the bad, the ugly about yourself and about trading in general, what to do, what not to do. And when I started looking more at the micro side of things, it helped me understand the macro more. I obviously wanted to size in and put up those big numbers, and that was what I was always interested in. But you can't always do that on every single situation, and that's something that only experience can help you with. So I've learned a lot of lessons, and I can't wait to talk to you guys about my approach, what I'm looking for, and I can't wait to get to know more of you. So let me answer this question for you guys. This one is from Martin. My question is about Fibonacci. When long or short, where should you draw the retracement? Daily chart, minute chart, low to high, high to low. I've been reading and studying fibs, and they don't work for me. I've seen you and Micah use it and talk about it, and it seems to work. Okay, so in a nutshell, Fibonacci is an indicator that we use when following trends. So just a really, really quick example. If a stock is trending up, of course there's breakout buyers, right? There's people who are trying to catch the breakout. But there's other ways to catch a long trade as well. So there's breakouts and there's retracements, right? You could wait for a dip. This is the washout long that Max is pretty famous for. Max does not like to be buying when the stock is breaking out. He would much rather he see it break out. He sees the interest in the stock on all time frames. He sees the interest in the stock, and he wants to be a buyer when it comes back down to test these proven support levels. And that's basically, Fibonacci is a guideline to do that. So Fibonacci is it's a great tool that we can use to catch the very deep retracements. And so when you're going long, you probably want to figure out what time frame and what kind of move you're looking for. That'll depend on where you want to draw your retracements. But it's always going to be high to low for what you're trying to do to catch the long retracement. And Fibonacci is very subjective, and there's many things that go into Fibonacci trading. You may see someone with a very high level of accuracy when they're trading the fibs, and make no mistake, the Fibonacci is just a guideline for entries. But that does not mean that the house itself is built on Fibonacci. The Fibonacci may be the foundation, but there's many things that go into the house. when building a house. And I guess that's the easiest way that I can explain it to you guys. So it's a very powerful tool if you know how to use it. I do recommend that everyone studies Fibonacci. There's some very awesome Fibonacci traders in the history of the market. And that's what really drew me to it personally. I love numbers. I love patterns. For those of you who don't know, I'm 100% technical. I'm not saying that fundamentals don't have a place in a game plan, but I am saying that price action always comes first. I don't care what story you have about any stock that you're looking at. I don't care what the analysts are saying. I don't care what CNBC is saying. I don't care what anyone is saying. If price does not line up to what I'm looking for, I'm not trading it, period. You can have the best company in the world, the best earnings, it's a market leader, it's a sector leader, it's a whatever in their own respective industry. It's a leader, it's whatever, right? If it's tanking, I'm not looking to buy it. I mean, unless I was an investor, right? And then I was looking to get in and hold it. But that's not what we're talking about here. So price action is always king for me. And that's what I base all of my decisions around. And what's great about that is that you don't have to sit and wait for a very large period of time. And you can participate in price at a relatively quick amount of time. I mean, I can't say that you can just log on and, learn about indicators right away and start making money. That's not how it works. But I think a lot of people make the mistake of looking in all the wrong places. And I think that it's safe for me to say that the number one thing that you should focus on is price. And everyone is, everyone has their own way, and this is what works for me. And I absolutely love technical analysis, and that's what I look to further my edge upon every single day when I'm studying or trading or whatever I'm trying to do. So I hope I answered your question. So many friends here. There's so many people that I can't wait to interact with. I've been on Twitter for many years. I haven't really been in the limelight per se. I've always kept my myself, my identity, my story and everything private. I always wanted to just be a sponge and just soak up as much knowledge as I can. But for the sake of you guys getting to know who I am better, and for the sake of networking and speaking with all of you and making new friends, I decided to show you who I am, and I'm speaking with you now, and you guys will have an open line with me every single day. And I look forward to interacting with all of you. I don't know about Max, but I don't have a Lambo in my garage. I don't know about Max and Rob. I don't have a Lambo. I don't own a Rolex. I don't have beachfront property. I'm not a millionaire. I haven't made $1 million trading, and I'm very open about that. And this is not some, oh my God, you're never going to see me in a picture with Ferraris and some hired escorts. Okay, you're never going to come trade with Mikey Yo. And no, that's not what it is. I mean, I'm very happy making $500 a day, $600, $700, $800 a day. Sometimes it's more, sometimes it's less. But that's something that I'm very happy about. And I think that everyone forgets how great this job is, how low the overhead is in this business, and the scalability. And I encourage all of you to focus on the technical aspect of trading and focus on getting yourself a positive group to hang out with, where it's not a pissing contest, where there's no bashing. Like, Madaz Money will be 100% bash free. None of us are going to tolerate it. There will be no bashing of other chat rooms. There will be no bashing of other traders. There will be no pumping of any kind. There will be no price alerts. There will be none of that. So if you guys are sick and tired of that, like I am, if you guys are sick and tired of people talking crap about others on Twitter, if you guys are sick and tired of all the BS that I mean, this may be a place for you to come and hang out and make friends, because we focus on the positivity and the the positive social aspects that the community can provide. And I think that that's something that we've believed in for a long time. So anyway, it was great being here. It was great. I'm glad I can answer this question for you guys. Martin, to you specifically, who asked this question, don't give up on Fibonacci, okay? Fibonacci is not something, I mean, it is not easy. It is not easy by any means, but it is powerful. And if you guys look into it and study and do your homework, you guys, I'm sure you'll be very happy with the result. And I'll be helping a lot with my approach to Fibonacci, my approach to longing and shorting, what I look for, what I completely avoid, and my approach to, life in general. I mean, this is going to be a community where you can come and talk to me, talk to Max, talk to Rob. A quick note about Rob. Rob is one of the nicest guys that you're going to meet. I mean, Rob is the kind of guy that if I called at 1 a.m. to move furniture, he'd probably come and help. I mean, he's a great guy, and Max is a great guy, and I've known these guys for a long time. We've been trading live. We've been talking. We've been hanging out. We killed it in Chicago, guys. I'm not even going to tell you how crazy it was hanging out with these guys in Chicago. Oh gosh, we killed it. But I want you guys all to know that all of us really, truly, genuinely are not looking to sell you some get-rich program, because there is no get-rich program. I'm not a millionaire. I'm not making 80,000 a trade. I'm not, but there is consistency to be found in certain technical analysis patterns, and there is a lot that you can learn about the sequences and Max's approach, which is very, very heavily into tape reading and into the level 2 and the things that I don't even see Max sees. So it's really awesome. And that's I guess that wraps it up. I mean, I'm so happy to be here. I'm so happy to talk with you guys. I wish I could answer more questions for you guys, because I'm getting crazy DMs right now, actually, to speak with you guys, and I would love it. So if you come into the room, ask us anything you want. I mean, we're more than happy to have you and you guys to watch our daily process and what we're looking to do. And I think it's going to be great for everyone. So I'm really happy to be here, and I'm really grateful. And my hat is off to Max and Rob, the other gentlemen in this. And I can't wait to get started.
All right, thank you for that, Micah. Really appreciate your kind words, and really appreciate you introducing yourselves formally, finally, and showing your pretty face for all the world to see. I was actually trying to get this guy to show his GQ face for a while, and he wouldn't do it. He just wouldn't do it.
I was fighting him every step of the way. I'm like, what does my face have? Okay.
I know. We were. It was a joke. We were actually gonna call him Micah Mystery Face if he wasn't gonna show his face. But you know what? I'm glad. I'm glad you showed your face for all the world to see, man. And it's better to make a connection with people. It's you put a face to a name, and
Well, that's really what it's about. I don't think anyone gives a crap what I look like. I think it's. I think it's more like. I think it's more so now they feel like they know who they're talking to. Now they feel like they can put a face to the name. I don't look like a little 3-foot freaking ogre, and they're like, hey, I don't want to talk to this guy. I don't even know who he is. His avatar is a cartoon, So for the sake of you guys, I've showed my face. I've had endless messages saying that's not Micah. Well, I don't know, for better or for worse, that is. And I think that I think it's going to be great to speak with all of you guys, and I'm very excited to learn more about you guys. I want to meet you guys. I want to hang out with you guys. Max and Rob and I are people that you can talk to. We're people that you can come to an event, and you don't need any money. You don't need any money. You don't have to be rich to hang out with us. You don't have to like pull up in a freaking Porsche. We're not. But you know what I'm saying? You'll never see me on Twitter saying, "Oh, I don't have time for these guys. I'm freaking rich. I'm whatever," or you guys have to have some kind of, qualification. No, dude. That's not what this is about. It's not what this has ever been about. Max has been answering emails for free for years. Many of you here have seen me answer your questions in DMs just because, and Rob is the same way. I mean, he's the absolute same way. So I'm really happy to be a part of something that I believe in. See, this is something that I personally believe in. And this is going to be great for everyone, I think.
Absolutely. I mean, we're going to promote this community as a means for everyone. Again, it's our motto on our website. This is a community where everyone can join, and we're going to talk about more into it in the next couple of slides. But this is a community that we've built with the typical average guy in mind. Okay, we were once, myself, Micah, and Rob, we were all at one point the average guy, struggling to make it as a trader.
Absolutely.
I did not have a mentor, starting off, and you guys have heard me tell my story in numerous in chat with traders and in the Trade Ideas conference or whatever. I've told my story numerous times where I did not have a mentor starting when my trading journey, and it was very difficult. And I always remember how much of a struggle that was, and I just really hate to see each of you come in and go through the same thing as me. I'm here to help fast track you guys, at least get you guys off on the right foot, get you guys off on the right track, and that way you could catch up to speed and just don't get stuck in like step one, or in many cases step zero. Really, some people never even get the ball rolling. So at one point I was almost in danger of being in that position myself before I thankfully somehow figured it out. But it was hard. So that's what this community is all about. We're here, we're family, we're here to just create that sense of camaraderie. We're here to help you. Exactly. We've done this in the past. If you guys have any doubts whatsoever, you got to understand, myself, Micah, we've helped you guys in the past for several years now, pretty much volunteer work, community service, volunteer work.
That's true. That is true.
We've answered your emails. I've taken Fridays off, Saturday nights off to answer emails, to write really long, thought out emails, and I'm starting this community, because that just got too crazy. I would get like 100 emails, 100 DMs. I mean, I can't do it anymore. But so by starting this community, now I'm able to talk to all of you guys in one setting, in one environment, in a very friendly environment.
Nobody has to wait.
Exactly.
Sometimes time is of the essence when you have a trading related question. You may be in a position, you may be thinking about a position, and although none of us are licensed professionals, we can tell you what we would or would not do. And if you find value in that, then maybe that's for you. So I think that, and this actually reminds me, guys, if you want a quick funny story, I was one of the guys that was emailing Max about my trading questions. You remember that, Max?
Oh, yeah.
Years ago.
Micah was one of my haters, actually.
I was.
Micah was one of my haters.
See, we could laugh about that now. Maybe I was like a lot of you at one point in regard to the fact that I was like, dude, this guy Max is full of shit. Okay, this guy's full of shit. Okay, washout longs, and I was like, oh man, screw this, dude. I want to go 30K shares short. I want to go 50K shares short, and I want to swing this. And this company is crap. This company is garbage. This is going to zero. And guess what happened to me? Time and time again, I learned the hard way that timing is more important than anything, right? The timing. Okay, like I mentioned before, you can have any theory about any stock, any market, any trading vehicle you want. That doesn't mean that if you're on the wrong side of it, timing wise, that you're gonna capitalize on that trade. It's usually the opposite. There's so many factors that go into it. But I remember asking Max a lot of questions, and he answered them. And over time, I started to see, hey, what he's saying has some validity here. It really has some validity. And slowly but surely, I started to ask him more questions. And I was like, hey, well, why? Tell me this. Why do you do this? Okay, just whatever. Entertain me. Why do you do this? I just want to know. And I started seeing what he was saying was making sense. And a lot of the principles that I use are actually from Max. Now, Max and I have two totally different styles. I'm looking at bids, I'm looking at sequences, percentages, and that's what I base my trades on. But some of the most concrete rules that I have are the same as Max's rules. When it comes to, is this a valid long setup? It's just a yes or no question. It's really as simple as that. Does this qualify as a long? We have specific parameters for that. Is this a valid short? There's absolutely times where you do not want to be short. Ever. Period. I don't care what anyone says. I will not be short at certain times. I will not be long at certain times. And it's great because Max and I both follow those same guidelines, and so does Rob. Rob's he's a phenomenal trader that you guys don't know too much about right now, but I assure you, Rob is awesome. He's primarily short biased, and he kills it. I mean, a lot of times he sees it before we see it. We're all looking for the same things most of the time, and he's a great addition to the team. But I can assure you guys that if you send us a question, we're going to answer it right away, and we're not going to give you any kind of condescending or sarcastic response like, "Hey, go Google.com. Google's your friend." We're not going to do any of that. Okay. If I make $100 a day, I'm happy. Okay. Who am I to talk to any of you like you're below me? None of you are below me. None of you are below Max. Right? Let's be honest here. I mean, Max and I are arguably good at what we do, but we're also very aware of the fact that a kind word goes much further than anything else. And Max and I still live our lives like that, So you guys don't hesitate to ask any kind of questions. Don't think, "Oh man, this is stupid. This is not worth Max's time." No, don't think like that, because this is going to be a community where you can ask anything. "Hey, what's a limit order?" Well, I'll tell you what a limit order is. Okay. I mean, there's really no problem with that whatsoever. So I just want you guys to know that I stand behind these other two guys. These are very fine gentlemen. And I think that we do things a little bit differently, and but we respect everyone. There would be no bashing, there'll be no bad mouthing, there'll be no trolling allowed, and that'll also come from us too. You'll never hear us say a bad thing, and that's how we like to live. And I think that if you want a low stress environment with a bunch of friends, this may be for you. So,
can I chime in for a second, Micah?
Yeah. Dude, I was waiting for you to chime in, dude. I mean,
not many people had the opportunity to trade with Micah, live, but I have, not live, but on Skype and stuff. And this guy, he is very disciplined. I mean, and this is what trading involves. You need a lot of discipline. He will wait for his entry. If it doesn't get to it.
6 hours, right?
Yeah. If it doesn't get to it.
Sitting behind the screen 6 hours later, dude, if it pops here, I'll be there short.
Yeah. If it doesn't get there, you won't touch it. And that's
please get there, because I just wasted my whole freaking day on it.
Yeah, but that's the key. That's a good problem to have. I mean, you need discipline in trading, and that's I just wanted to say that about you, Micah. I mean, you're very disciplined with your entries, and that's to be admired. So
thank you. I appreciate that, man.
Yeah.
Yeah, FOMO doesn't exist in Micah's world.
No, it doesn't.
Let's just put it that way.
Well,
I will bunker up. I will grab food, put it next to my my trading desk. I have a little food stand. I don't know if I should have admitted that to you, but I have a little place where I'll put out a sandwich or a chicken breast and some veggies or something. I'll just sit there. I have YouTube on one of my screens. I'll have Twitter on another screen. I'll have, I have my scanners up. I have everything up, and I'm really hoping that price goes to where I need it to go, basically, for me to justify a trade. And if it doesn't, I'm not going to be a happy camper, because I've sat there all day. But that's trading, right? I mean, on the flip side of that, if I just did whatever I wanted to do, I would blow up every single trade, right? Because we can't do what we want to do. I mean, when you're down on a position, the last thing you want to do is hold it. The last thing you want to do is follow the trade plan. You're like, oh my God, I'm getting gripped here. I'm this or I'm that. You know, nobody wants to go to the gym. Nobody wants to eat a salmon over donuts. You know, we do what we have to do to stay ahead of the game.
Yep.
So.
Yeah. Yep. For sure. And then I see Sean asked a question. We're not really doing, you know, many more questions for now, but Sean, hey, we'd love to, you know, go, you know, into our past and everything at another time. And definitely tell you, I mean, we have so many interesting stories to give you guys about the experiences we faced throughout our learning and everything like that. So.
Oh yeah, I have tons of those. I mean, if you guys want to hear about what not to do, come talk to me.
Well, we'll save that for story time for another day.
Story time, absolutely.
Story time. Yeah, exactly. All right, guys, let's go ahead and jump into the nitty gritty. What you're here for, the special surprise, as I mentioned in my video the other day. So let's go ahead and just talk about the actual service itself, guys. Let's do it. So the Madaz Money Trading Community. What are we talking about? You're here to connect with, of course, Madaz, Micah, and Rob. We're here to help you. We're here to lend a hand. We've been there in the past. We know what it's like. And we're here to just show you guys the ropes the best way you can, like we've done so for the last several years. You know, but this time we're going to do it in a more organized, more efficient manner. It's not all over the place. We're not talking about, you know, emails that are like coming out of left field, like, you know, at like 100 miles an hour. This is like actual live stuff. And we feel like it's a lot more effective way to communicate with you guys. And of course, you guys have access to other traders as well. There's going to be lots of other traders in the community that will also be of great help to you guys. It's a great networking opportunity. We're going to bring in some other people probably in the future as well. Some people that probably a lot of you guys know very well, and they're gonna help, you know, deliver the message of Madaz Money and help spread that positive energy and that positive vibe toward all of you guys and create that sense of community, which is again what we're going for. We're not leaving anyone behind. We want everyone to be a part of this. We want this to be like something that we're sharing with you guys, and that way we're all a family, we're all growing together, and that's the message that we want to get across. So we want to create a network of traders. We don't want any trolls, we don't want any haters, we don't want any bashers, nothing like that. We're not going to bash any other, you know, any other services or anything like that. We're all about love here. We want positivity, and that's the way this community is going to be run. So all experience levels are welcome. If you're a newbie, we're going to have content for you. We're going to answer your questions. Like Micah was saying, we're going to answer even the most basic of questions. And yes, even if you're going to ask me what broker I'm going to use, I'm going to point to my fact page, which is something that I created to answer those type of questions specifically. But we're going to have, you know, content for all of you guys. You have any basic questions, there's going to be a blog post about it. There's going to be
absolutely,
you know, the fact page.
We'll even make a video for you guys.
Yeah,
you know, we'll gather up questions and we'll make videos. I mean, you guys let us know what you need, and if we can, you know, answer it, we'll answer it for you guys. If we don't know, we'll honestly say, hey, I don't know, and we're very honest about that. Like, I don't know about cryptos. So, for example, if you ask me about cryptos, I really don't know. I mean, I'm going to be honest here. I don't know. So, kind of like that.
Absolutely. So, but the bottom line is we're welcoming to everyone. We want everyone to be a part of this family. And if you're a more advanced trader, we're going to have content for you as well. We're eventually going to do webinars. We're eventually going to show you guys a lot of the more, you know, intermediate to advanced level stuff, like a lot of tape reading stuff. Like, it's going to be more difficult for like a new trader to pick up, but like if you're at that level already, I'd be more than happy to hold your hand and show you how I was able to get consistent with tape reading and you know, like things like recording your trading every single day and slowing it down, watching for, you know, the bids, these certain bids to show up, the bid props, the walls, identifying refreshing hidden sellers, things of that nature. You know, if you're at that level, hey, you know, come reach out to me. I'll be more than happy to help you. So trader psychology, this is something that I really love, and I feel like this is something that a lot of other services don't really focus on. So what do most services focus on? They focus on what? They focus on the dollar amount. They focus on, oh, I'm up like 7,000% this year. Oh, I'm up like, $5 million, and I'm going to make another $5 million on this trade that I'm holding or whatever, right? A lot of, again, I feel like the 80-20 rule, and I'm sure a lot of you guys are familiar with the 80-20 rule, right? So in this particular case, I believe 80%, I wrote a blog post about this, 80% of this trading game is psychological, okay? It's all about emotional control. I mentioned this earlier in this presentation. Emotional restraint, emotional control, capital preservation, mental capital as well. Capital preservation through preserving mental capital. And just understanding that a lot of it is in your head, okay? Like, if you are trading and you know everything, you're the smartest guy in the world. And I know this firsthand because I try to get my friends, a lot of my friends, into trading, and they're all extremely intelligent people. They were all engineers, doctors and lawyers, and just very intelligent people that, graduated like summa cum laude in college and everything, top of their class. And they couldn't trade. When the push came to the shove, they could not press the button. Or maybe once they were in a trade and it started going against them, they got that, that fight or flight fear kicking in, and they got the chills going down their spine, And that's the thing that we're going to be focusing on as part of this community. I want to start, mentally conditioning people that want the mental conditioning. I feel like it's extremely critical. It's like, you're like an athlete. Like, even if you were like Kobe Bryant or Michael Jordan, they had like somebody that was there to like a therapist or somebody there to mentally condition them for the big game, right? So for us, the big game is pretty much every single day. Trading is a high pressure environment. You're always on the hot seat. Your next trade might be, you might be on a hot streak, but you're only as good as your last trade or your next trade, right? You could end up facing a pretty bad drawdown at any point in time. And understanding that we're always on the brink, we're always on the high pressure situation. We are understanding the mindset behind it, understanding, the emotions behind it, understanding how we can control it. These are things that I'm going to be working on with a lot of you guys. I'm going to be doing some presentations, some webinars, and if I ever get invited to speak again at a conference or something like that, I'm going to talk more about this as well. It's something that's really very interesting to me. It's very close to me, and I feel like this is one of the main reasons why I've gone as far as I've gone, is because I understand this, and I feel like this is something that I could share with you guys. It's not something like, giving alerts and then the trade gets crowded or something like that, and the last person to bum rush the fence gets caught by the police or something like that. It's nothing like that. We're dealing with conceptual stuff that will really help you guys grow as a trader, and this is something, again, I feel like a lot of other services don't really focus on enough. So we're gonna probably bring in some people as well, some people outside that are even more knowledgeable about this field, and share this with you guys. So very excited to be able to make this a large part of this trading community, and I'm really excited to start implementing this and sharing these ideas with you guys. So again, discipline, FOMO, focusing on consistency, the no blow up challenge, of course. These are one of the main principles of the no blow up challenge. So we'll talk about the no blow up challenge, the psychology behind it, the methodology behind it, the ideas and how you can size in properly, how you can, strategically take your trader nap, how you can strategically know when to walk away, when to stop trading. This is a problem that a lot of traders have. When do I stop trading? When do I stop? How do I know when to stop sizing X amount? Things of that nature, When it comes to trading, less is truly more, okay? So when you can do less and still make more money, and that's something that I've found out, and this is something that I've also talked to Rob and Micah about, and they also agree with me and share this idea with me. If you can somehow accomplish more by doing less, that's freaking amazing. If you can trade for 2 hours a day and make all your money, again, the 80-20 rule, right? 80% of your money, especially for me, 80% of your money is made in the first 20% of the day. At least for me. I don't know about you guys. I can only speak for myself, but I think a lot of you guys would agree with me. And that's something that I really want to push out there. That's when I size up in the morning, and then I size down progressively throughout the day, because that's when the grade A subs are appearing less and less frequently. So these are all the principles of the no blow up challenge: having discipline, having the discipline to not FOMO, and then therefore, as a result, establishing consistency, which is what we're all trying to strive for. And I know I get these emails all the time. How do I get consistent? I don't know what I'm doing. You know, or I make a lot of money, but then I proceed to lose it the next day or the next hour. You know, this is what the trader psychology aspect of this community is going to help you. And this is where the no blow up challenge, which I've seen a lot of you guys already start to implement that in your trading already, which is freaking awesome. I want you guys to keep doing that. Keep yourself accountable. Write a journal, which is something I'm also going to be stressing about in this part as part of this community. Journaling was one of the main things that turned my trading around for sure. So keep a journal, have some metrics, define yourself, and start the blow up challenge, and we'll help you any step that you need help along the way. All right, guys. So we're gonna have the chat room, of course. The chat room is going to be a main part of the community. We're going to have webinars. We're going to teach some classes, okay? And again, we're open to ideas of what you guys want these webinars and classes to be about, okay?
Yes, absolutely.
Absolutely. You know, you guys want something about, you know, any technical analysis type stuff, more than happy to do it. You know, what kind of indicator you want a class on, more than happy to do it. We created this for you guys, okay? We're not doing this for us. We're creating this for you guys. We genuinely love helping people, which is why I've been doing it for free for 7 years. Okay, I've dedicated hours and hours.
Can't argue with that.
Yeah, I've dedicated hours and hours of time. I know where I came from, guys. I've had humble beginnings. You guys probably heard my story time and time again. I've come from humble beginnings, guys. So I love helping people. My mom loves helping people. It's rubbed off on me. You know, I donate to charity and stuff all the time. My mom does community service all the time. So, you know, I love helping people, and I'm very open to creating this as a community for the people. So if you guys want a certain type of webinar, you want a topic covered, please send me an email. I'm open to the ideas. If there's a large enough demand, absolutely, I'll do it. Okay, and we're going to do obviously more Q&A sessions like this one. You know, I love seeing these questions that you guys submitted. They're absolutely wonderful, very well thought out. And again, I apologize for some of you guys that did send questions. I didn't have enough time to add your question. I'm going to go ahead and answer them via email. I promise you, I have my word, I will answer your question. But we're going to do more Q&A sessions like this, where we're going to have like a discussion and talk about things that you guys want to talk about. Again, this is a community for you guys, and we want to make it for you. Podcasts. So this is something that Micah is going to be in charge of. He's going to be doing a lot of podcasts where we're going to be talking about things, you know, about trading and things beyond trading. You know, we want to make this a fun community. We want to talk about, you know, life outside of trading. We want to talk about, you know, what we had for dinner last night. How Micah always tends to order the wrong type of sushi, and he looks like a total noob out there. So why don't you take over a little bit and talk about what your podcasts are going to be about, Micah? So,
guys, I love to speak with you guys. I love to answer questions. If you guys haven't noticed, I respond to almost everyone on Twitter. I love to see if I can help in any way, and if I can't, then I can't. But it's also been so rewarding to speak with many of you guys. I mean, some of you guys, you know who you are. We're real. We're really tight, and you guys invite me over. I invite you over. I mean, I have friends all over, and that's only because of the relationship, you know, building that I, you know, believe in. Just answering someone's quick question, or, you know, listening to someone how someone's day is going and stuff like that. And, you know, I figured, how can I give back with the skill set that I have? And I believe that everyone would love a podcast. I believe everyone would love the opportunity to just have their question, you know, answered, network with other people. We could talk about whatever. You know, we can have people on that want to talk about things outside of trading. I mean, trading is not the end all be all why we exist in life. Trading is, you know, how we create value in other areas of our life. It's a source of income. It's a source of, it's a source of, you know, it's true love for many of us. But at the end of the day, it is a job. And there's many other aspects in life besides trading. And, you know, there's so many of you that have a lot to share and a lot to help others with too. And I think that having a large setting, you know, for others to give others a voice would be great for everyone. So I'm going to be doing a podcast now. We don't exactly have a time frame yet. So you guys are going to have to give us a little bit of time for that. I don't know, it may be up next month, maybe the month after, I'm not sure. But I will immediately be looking to hear from all of you on what you guys are looking for in the podcast and what you guys would love to see. And I have a lot of special guests. I have many friends in the community that I've reached out to, and they would love to be a part of it too. So you're not just going to be hearing me and my raspy Chicago voice. You guys are going to be hearing from many of the well-respected traders in the community and many people that are just like you, and even you guys that want to talk and, you know, grow your following and make friends and network. And I think it'll be a lot of fun. So that's something that we're going to look to implement.
Awesome. Yeah, definitely. This is a very exciting feature that we've talked, myself and Micah have been talking about for several months now, and we're very excited to essentially humanize ourselves and show, you know, the personal sides of our lives, and to show you guys that we are real people. We have real, you know, we have real emotions, real lives. We experience things outside of trading, and it just goes to show you that there's, you know, there's more to life than trading. Okay, so that we were very excited to share that with you guys and give you guys a chance to get more of an insight to who we are as people. So let's go ahead and move on to the next bullet point, which is giveaways. So if you guys recall, last year I had Madaz's Mad giveaway where I gave away a monitor, a gaming keyboard, and I gave away a mouse. So you guys can kind of see a baseline. I'm not exactly giving away, you know, $10 gift cards to McDonald's here. I'm actually giving away very real and useful items that will help you in your trading. So we're going to be doing lots of more giveaways. Obviously now we have, you know, a place to, you know, a medium to do these giveaways through, which is we have the community now. And we're going to be obviously giving away lots of really fun and exciting and lots of very nice, useful stuff for you guys. So, you know, be a part of our community, and we'll definitely, you'll see that we'll definitely give away some really nice stuff. So, hey, man, we might give away another monitor, another keyboard, or maybe something even more than that. You gotta wait and see. You gotta keep that hidden and keep that a surprise. But you gotta wait and see. It's gonna happen. It's gonna happen, guys. It's gonna be. You're a part of the Madaz Money Trading community. We want to give back to you guys, and this is one way we're going to do it. Meetups. We're going to do meetups. I've gotten so many requests for meetups.
Oh my God, the meetup requests.
Yes, the meetup requests have been insane, guys. I mean, I've been waiting to launch this so we can start these meetups.
I honestly think like 500 people have done like a meetup request just to meet personally.
Yeah.
Like, I am not exaggerating, guys. So we're going to be having meetups, whether it's in Chi-Town, whether it's in LA, or if there's a huge chunk of you guys in a certain demographic, then we'll be looking to come there. Honestly, we'll just come. Yeah, we will.
Yeah,
and you don't need any money. I mean, you don't need to like pay some huge fee or something for an event. No, I mean, if you want to grab drinks or something, that's all you need money for. You know, if we do something like a meetup for you guys, I mean, everyone can come. You don't have to have some special qualifications. We want to see all you guys. I don't care if you've never placed a trade. I don't care if you're making 7 figures a year. You know, we would love to see you. We would love to hang out with you guys. And yeah, it's going to be great. I mean, I'm kind of scared how many people are going to show up, honestly, because the interest is massive.
Yeah, it's insane. And definitely, if you're making 7 figures a year, definitely hit me up. No, I mean, if you definitely show up to these meetups, yeah, it's going to be a great opportunity for you guys to meet us, network with us, ask yourself these questions in person. Also, at the same time, you know, connect with other traders, you know. I mean, it's a great opportunity for you to just get yourself out there. It's just like any sort of meetup, you know. We're creating this for you guys, and it's just a wonderful opportunity, and we want to make it available to everyone. So definitely, we're going to have a lot of these. We're going to do like maybe a poll where we figure out where most of you guys are situated in. You know, if you guys are situated in certain parts of the country, we'll do it. You know, just let us know, and we'll be there.
Yeah, let us know.
Absolutely. Absolutely. And then if you show up, you better believe I'm going to give you guys one of these, you know, these Madaz Money sexy T-shirts. I got like a box full of them. You know, they're ready to be handed out. You know, so show up. All right. So we're also gonna be having some discounts to some various trading services. So you know, we're working on some nice deals for you guys with a couple of various trading services. You know, and if you're a part of the Madaz Money Trading community, you're gonna be the beneficiary to a lot of these deals. And I know Micah's working on a couple. I'm working on a couple, and we're gonna make
a lot of exciting stuff for Madaz Money subscribers. You know, not only will you get a community where you can network and make, you know, real friends with real honest people and healthy people in your trading community and in your lives, but you're gonna have discounts galore. I mean, Max is like the discount king. I mean, as you guys know, I have some partners that I've been working on, I've been working with, and, you know, we're going to bring an even better package to you guys inside the room. So, you know, whether it's brokers, whether it's scanners, whether it's really any kind of tool that us traders utilize in our day-to-day, we'll probably have something for you. So definitely look into that, because there's a lot of exciting stuff on that end.
Absolutely. All right, and we're also going to focus on the lifestyle side of things. You know, you guys have seen my my paper abs, which are actually not paper abs, but
no abs.
Yeah. No, we're going to focus on the lifestyle things.
400 plus pounds. Okay, it's all fake. It's fake weight.
It's fake weight. No.
Fake weight.
No, but we're gonna focus on the lifestyle side of things. I have a passion for fitness, dieting. So does Micah. I have a passion for travel. I'm gonna work on some nice nice deals in that department as well. I'm gonna be looking at partnering with companies that maybe can give you guys a discount on, like, you know, things from ranging from you know, computer to you know, even maybe like cheaper flights or maybe cheaper protein powder. Who knows? Like, we're gonna work on it. You know, we want this to be a party. The Madaz Money Trading community, because this is a part of something that we're passionate about, and we want to share it with you guys. And I feel like a lot of you guys would love to find out more about these type of things as well. You know, it's one thing to make the money, but it's another thing to find a way to effectively spend the money, right? So keep yourselves healthy, keep yourselves feeling good, so that way we can come to work every single day, and we're gonna be banking all the way. You know what I'm saying? So, all right. So now time for the nitty gritty.
Yeah, what you guys have all been waiting for.
All right, hold on. The stream's down. All right, so time for the nitty gritty, right? So this is what you've all been waiting for. So we're gonna talk about pricing. Dun dun dun.
Yeah, if you guys have stuck around to the end, you are in luck. There's a lot of people who did not want to stick around until the end. May not get this deal.
Yeah. I saw some of you guys that left. Okay, the 40 of you. I saw
some people
that.
have left. They may regret it.
The 30 of you that left that didn't want to stick around. Yeah, the 30 of you that left that didn't want to stick around and listen to us spiel nonsense for the last 30 minutes. I'm sorry. You're shit out of luck. All right, so we're going to talk about the pricing, all right? So this is the grand finale, okay? I promise you this is the last slide. After this, you guys can go back, watch football, or have your hot dogs or whatever, all right?
Patience is key in trading, guys.
All right. So $99 a month is going to be our base pricing for our monthly, and our annual is going to be $82.50 a month, okay? So that's the base pricing. That's if you go to madazmoney.com right now, that's what is showing, okay? That's our baseline. I feel like we could have, you know, we could have easily charged like $150, $200 a month, but, you know, we're not about that. This is not about us. This is about you guys. I mean, we had to charge something because obviously we made it completely free. A bunch of trolls are going to show up, right? I mean, it's going to ruin the integrity of the chat. And at the same time, you know, like this entire endeavor, it does cost money to start up. I've ran the Madaz Money website for free for 18 months now. It did cost me money. I gave all that information away for free, but because I wanted to start a bigger endeavor this time around, I had to hire a lot of staff and a lot of, you know, a lot of people that are working behind the scenes to make this happen. And, you know, that cost a lot of money as well. So a lot of this is going back to, you know.
Yeah, the website costs money. There's a lot of back-end stuff.
Exactly.
That's integrated into the website and a lot of features. I mean, one thing that you can't put a price tag is time. And this is, the time to create value, the time to reach out to companies and get you guys better deals, the time to put all of this together, to make a community, to sit and brainstorm what would be great for the community, what can we offer, what would they like. And none of us wanted to be a part of anything that would cost you, your freaking left leg. I mean, that's, so I think we all agree that, the price is affordable. I think we all agree that
it's
very fair.
Yeah, it's very fair.
Slow and it's fair.
All things considered, yeah. All things considered, we tried to make it as cheap as possible without obviously making it unsustainable for ourselves. And I feel like this is a very, very fair price point. And guess what, guys? Like I said, I'm a person of the people. Okay, guys? We're not stopping there. You can see the slide has more to it, right? So let's get to the good stuff, okay? Here's the surprise. Can I get a drum roll, please? All right. Here's the surprise, guys. For those of you that stuck through the thick and thin to the very end, the first 500 people to sign up right now with the promo code, and again, $99 a month, $82.50 a month. If that's not cheap enough for you guys think that's still too much, guess what? First 500 is the promo code, all caps.
First 500
off. If you go first 500 people with all caps, 20% off. That essentially brings it down to $79 a month for the monthly. And guess what? If you do the math for the annual, $66 a month. Are you kidding me? Dude, Madaz, did you really just lower your price down to $66 a month? Micah, did I really do that? Micah.
You did it.
Did I do that?
We all agreed that this was the best move for the community.
Dude.
We could have charged much more than this. You guys know we could have charged much more than this. Madaz didn't want to charge. When he invited me to mod, the first question I said was, well, what's this going to be about? And he said, I want to make it affordable for the whole community. And I said, well, let's talk about it. And it made sense for all of us. And I think it's an awesome gift for everyone. I mean, this is truly something that everyone can afford.
Absolutely. Again, guys, I could have easily just charged $150, $200, and probably still would have gotten a fair amount of people to join, and I would have been laughing all the way to the bank. But that's not what it's about,
but that's
guys.
not us.
That's not what
that's
it's
not
about,
us.
guys. That's not what it's about, guys. We're lowering our price, and for the first 500 people to go and sign up, this is our gift to you, and this is enough to cover our expenses, and this is wonderful. This is something that we really are very excited to get off and running, and we just love to have each and every one of you join us, and just let's get the show on the road. You know what I'm saying?
I thank you, all of you, for coming here and asking your questions. I thank everyone that sat and listened to us ramble for whatever it was, 2 hours. But I promise you, if you come into the community, we'll answer all your questions. We'll interact with you. You won't feel like you're speaking to someone who doesn't want to speak to you or anything like that. And there'll be no bashing, no trolling. There'll be no pumping. There'll be no there'll be no BS, and any of the BS that sometimes is just a byproduct of an outlet on social media. There's going to be the good, and there's going to be the trolls. And guess what, trolls? You're not going to have a voice in the room. You're not going to be attacking our members, and you're not going to be attacking other subs or services, and neither will we. So we like to focus on what really matters, and that's making friends, learning, growing, and having fun. Come to the meetups, guys. Honestly, I want all you guys to come to the meetups. We'll talk with everyone. I mean, like I said, I'm scared to see how many people are going to come. But, I mean, dude, we'll have a drink with you. We'll eat with you. Max, Rob, and I are just normal guys. We're not hedge fund guys. We're not guys that are, rolling up in Ferraris. And I think that everyone can come and have a great time.
Yep, sounds good. So again, guys, $66 a month if you use the promo code and sign up for the annual. That's about $2 a day. We're talking about the price of a Big Mac here, guys. for a price of a Big Mac, you get to join a wonderful community. It's something that I've really wanted to do for a while, and I'm really excited to get this off, up and running, and get it off, get the show up on the road, and let's do it, guys. Let's do it.
Thank you guys. Thank you guys, everyone, for listening.
Thank you.
Awesome.
Thanks, guys.